The Twitter frenzy. Investors scramble for a piece of the social network in the biggest internet flotation since Facebook. Plus, pressure mounts on the European Central Bank to cut the cost of borrowing as the Eurozone economy struggles to grow. Hello and a very warm welcome. You with World Business Report. I'm Sally Bundock. Yet another record close on Wall Street. Our team in Singapore will bring you the latest from the Asian markets. But first, it's the biggest technology flotation since Facebook. But is it a major investment opportunity or a bubble waiting to burst? The social network Twitter makes its stock market debut today. Late on Wednesday, Twitter confirmed it's priced its shares at $26 each. That's even higher than expected and signals there has been very strong investor demand. It gives Twitter an overall stock market valuation of around $18 billion. Not bad for a company that's never made a profit. Mariko Oy reports from Coney Island on how Twitter makes its money.
Now the 2-0 to Gamboa, blooped in the right for a base.
It's considered America's pastime. The Cyclones are a minor league baseball team. Based in Coney Island, these players have been drawing the crowds in their Brooklyn neighborhood for 12 years. Billy Harner is the team's director of communications, and Twitter has become a huge part of his job.
Twitter for me is kind of it's an everyday thing, it's an every hour thing, it's an every minute thing, it's always going on. So it's something that we have to monitor almost on a minute by minute, hour by hour basis, particularly when we have games.
When the games are being played here, Billy gets very busy. He tweets about the experience at the stadium and, of course, after every single score. But he also uses it to receive instant feedback from all the fans who are watching the game at this park here in Coney Island. Some businesses even pay for their ads to appear on users' timelines. Advertising accounts for more than 90% of Twitter's revenue, and it's more than doubled since last year. But the company has yet to turn a profit, so is all the hype worth it?
For an advertiser, Twitter's a pretty valuable proposition. And the upside for Twitter, the future value is that right now they're only making money from a small percentage of its user base. So going forward, as they start to monetize the rest of their users, there could be a lot of growth there.
And Billy Harner thinks Twitter is not just a fad.
It's a tool that everybody uses, and unlike MySpace, where people kind of got over it when it got kind of too commercialized, Twitter and Facebook have both done great jobs of kind of letting it be what it is. And for businesses, it's a great way to see your clients, your fan base. I think because of that, I think Twitter and social media, it's only going to get bigger. It's not going to go away anytime soon.
But that's only if the fans continue to follow Billy's tweets. The site thrives on its popularity, and there's evidence of slower user growth. What Twitter needs is not a home run, but many regular hits. Mariko Oy, BBC News, Coney Island, Brooklyn.
And we'll talk some more about Twitter when we review today's newspapers. That's in around about 10 minutes' time. But first of all, is a cut in interest rates on the cards for the Eurozone? Officials at the European Central Bank meet later to set the cost of borrowing in the 17 countries that use the euro. Rates are already at a record low of 0.5%. Now, they're under pressure to make credit cheaper amid signs of a weakening European economy. Prices are rising at a very slow rate, largely due to falling wages. So annual inflation fell to 0.7% last month. That's well below the ECB's target of 2% for a healthy economy. 1 in 8, that's 12.2% of the Eurozone workforce, is still without a job at the moment, and the economy is forecast to grow at a measly 1.1% next year. That's according to the European Commission. Well, Timo Del Carpio is European economist at RBC Capital Markets. He's joining us now from their London trading floor. Good morning. First of all, what are you expecting the ECB to do today?
So I think it's fair to say that the dynamics have changed going into today's meeting. As you mentioned, some of the data coming out of the Eurozone over recent weeks really has been decidedly soft. So we've had inflation printing at a near 4-year low. We've had unemployment confirmed at a new record high. And on top of that, we've had a credit picture in the Eurozone that remains decidedly anemic. Now, all that gives plenty of fodder for the governing council to mull over, but I think we at RBC are not expecting the ECB to jump the gun with a rate cut today. And I think the main reason for that is that it's not a question just whether the data or the numbers are weak. It's about whether they're weaker than expected in the eyes of the governing council. And in that context, it's worth recalling that the governing council has been talking about a very weak recovery for some time now.
Now, with interest rates at 0.5% anyway within the Eurozone, a cut, of course, would perhaps give a symbolic boost to financial markets and maybe a bit of a feel-good factor for a short period. But what impact would it really have in helping Eurozone economies?
No, indeed. I think from the governing council's perspective, I think they're more likely to be worried about pockets of vulnerability in the euro area. And that in turn suggests that more targeted support should be on the agenda. That might come in the form of further liquidity support for struggling banks, but on the whole, as you suggest, a rate cut isn't, in our view, likely to have an immediate impact on the real economy.
Now, the euro today is going up, actually. I mean, it's been declining in recent days, but today it's headed higher on the stronger economic news we had out of Germany yesterday. As you say, we're following each bit of data as it comes through. What's your prognosis for the Eurozone?
So, I mean, you mentioned the euro specifically. I think that's, I don't see ECB President Draghi getting away without highlighting the euro in some way today. But that said, I think they will be at pains to emphasize that the exchange rate itself is not a target on its own. And in fact, we've had other governing council members in recent weeks downplaying the strength of the euro as a real headwind for the recovery. Overall, I think the governing council will continue to forecast or project a very sluggish return to growth in the eurozone, and all indicators suggest that that's what's on the cards.
All right, Timo Del Carpio from RBC Capital Markets. Thanks for your time this morning. Well, the financial markets across the globe are very much on central bank watch today. There's been another record close on Wall Street Wednesday. Let's go to Rico Hizon, who's at our Asia Business Hub in Singapore. Nice to see you, Rico.
Sally.
So how are the markets doing today in Asia?
Well, apart from what you mentioned earlier, the European Central Bank, Asian investors are also watching very closely, Sally, the Federal Reserve and how they will react to key U.S. economic reports which could impact monetary policy going forward. The first one, of course, is the third quarter economic growth data, which will be released later today. And the other one is the all-important October jobs report on Friday. And the numbers, Sally, could signal when the U.S. Central Bank might begin winding down its $85 billion a month bond buying program, or the stimulus initiative. And looking at the markets right now, Seoul shares are currently at their lowest level in 4 weeks as investors are reluctant to bet on stocks, while a decline in Samsung Electronics shares are adding further pressure. You have also losses in Hong Kong and China, deepening with dealers cautious before a Chinese Communist Party gathering this weekend, which is expected to outline economic policy for the next 5 years. Japan's Nikkei share average is also flat as investors search for new trading opportunities after a recent slew of earnings. So, Sally, it's all about wait and see until those key economic reports from the U.S. are unveiled. Sally.
All right, thanks very much indeed, Rico. Well, let's give you more detail on that report about growth in the States. So the US economy may have lost some steam in the 3 months to September. The official figures, which are out today, as Rico mentioned, are expected to show annual growth slowing to 2% in the third quarter, down from 2.5% in the previous 3 months. The figures could add to justification for the Federal Reserve to keep its $85 billion a month stimulus program in place. On Friday, US employment figures may show weaker jobs growth in September, as well as a slight increase in the unemployment rate. BP, Shell and Morgan Stanley are among firms accused in a lawsuit of manipulating the Brent oil market. 4 traders have filed a class action in a Manhattan court alleging that oil majors and trading houses have fixed prices since at least 2002. In May, the European Commission launched an inquiry into suspected anti-competitive practices. The North Sea Brent oil benchmarks used to price around 2/3 of world crude and determines the cost of petrol and heating fuel. That's all from World Business Report. Stay with us. We're going to look through some of these stories and the other business headlines when we review the papers. I'll see you soon.